Want to decode the market's signals? If you've ever stared at a trading chart and felt overwhelmed by all those green and red bars, you're not alone. But here's the good news. Once you understand candlestick patterns, you'll start to see the market's story unfold right before your eyes. Master candlestick patterns and start trading smarter. These patterns are like the language of price action, giving you clues about what buyers and sellers are up to. Candlestick Patterns Explained. Beginner's Guide. Whether you're just starting out or looking to sharpen your skills, this guide will help you spot high-probability setups and avoid common pitfalls. Let's kick things off with the basics. Before you can master the patterns, you need to know what each candlestick is telling you. Each candlestick on your chart represents price action within a specific time frame, whether it's 1 minute, 1 hour, or 1 day. The time frame you choose depends on your trading style, but the principles stay the same. It shows 4 key things: the open, the high, the low, and the close. These 4 points tell you exactly how the price moved during that period. Picture a little rectangle with lines sticking out. That's all the drama of the market, packed into one candle. The rectangle is called the body, and the lines are the wicks, or shadows. The body shows where price started and ended, while the wicks show the extremes. So what's the difference between a green and a red candle? It's all about who's in control, buyers or sellers. Simple. If the candle's green, the price closed higher than it opened. That's bullish. Buyers are in control. A strong green candle often means momentum is building upward. If it's red, the price closed lower. That's bearish. Sellers are winning. A big red candle can signal panic or heavy selling pressure. But here's where it gets interesting. Candlesticks don't just show you what happened. They hint at what might happen next. Let's talk single candlestick patterns. The bread and butter of chart reading. These are the building blocks for more complex setups. First up, the doji. It looks like a cross and signals indecision in the market. When you see a doji, it means buyers and sellers are at a standoff. Neither side is winning. Next, the hammer. Imagine a candle with a tiny body and a long lower wick. Shows buyers stepped in after a downtrend. That's a bullish reversal. Hammers often appear at the bottom of a move, hinting that the worst may be over. Then the shooting star. It's basically the opposite. Small body, long upper wick popping up after an uptrend. That says sellers are taking over. Watch for these at the top of a rally. Remember this tip. Look for confirmation from the next candle before making your move. One candle alone isn't enough. You want to see follow-through. Alright, on to double candlestick patterns. These are where things get juicy. When 2 candles work together, they can reveal powerful shifts in momentum. The bullish engulfing pattern. A big green candle completely swallows the previous red one. That's a strong sign buyers are charging in. It often marks the start of a new uptrend. The bearish engulfing is just the flip side. A big red candle eats up the previous green one, signaling selling pressure. This can be a warning that a rally is running out of steam. If you spot these patterns, don't jump in right away. Always check the context of the trend. Are you trading with the bigger picture or against it? Context is everything. Now let's level up with triple candlestick patterns. These are like the market's megaphone, signaling powerful reversals. When you see these, pay close attention. The morning star. You'll see a bearish candle, then a doji, then a bullish candle. That's the market waking up and turning bullish. It's a classic sign that buyers are regaining control after a sell-off. The evening star is the opposite. Bullish, doji, then bearish. That's your red flag for a potential drop. It's a warning that sellers are about to take over. Then, there are patterns like 3 white soldiers, 3 strong bullish candles in a row, and 3 black crows, 3 bearish candles. These signal powerful trend continuation. When you spot these, it's often a sign that the current trend is gaining strength. Now here's a pro tip you can't ignore. Candlestick patterns work best when you combine them with other tools, like support and resistance, volume, and trend lines. The more evidence you have, the better your decisions. Don't just rely on patterns alone. Use confluence. The more signals you have lining up, the stronger your edge. This is what separates amateurs from pros. Alright, now that you know the patterns, it's time to practice. Open up a demo account, scroll through charts, and start spotting these patterns in real time. The more you practice, the more confident you'll become. Hit like, subscribe, and let me know in the comments which pattern you'll try trading this week. Share your experiences. Your feedback helps others learn too. Good luck out there. And remember, always trade smart. Stay patient, keep learning, and let the candlesticks guide your way to better trades.